Hello again, and welcome back to another daily technical analysis video. In this video, we will be covering Ethereum from the daily time frames all the way to the 1 hour time frame. Now, starting off on the daily, we do see that we are still trending in this rising channel. Now, our momentum is towards the downside with the RSI below that 50 moving average and the stochastics expanding towards the downside. So in general, the momentum is towards the downside. Now, in confluence with the downside pressure is that we are in a downtrend on the daily with a high, a low, a lower high, lower low, and a potential lower high being set in before a continuation back towards the downside. Now, because we are in this channel, and it has been respected numerous times, including the median level, we could potentially see that bottom of the channel still as that target at around 2700 to 2770, around there. Now, do keep in mind that the pivot points have the daily S1s right underneath the bottom of the channels the previous two times, and the third time could occur in the same manner. So we could see a bounce similar to these ones. Given that there's a gap in between, it could be a quick push down before front running that daily S1. Now, if we pull out our EMAs, we do see that the shorter time frame, shorter period exponential moving averages are still towards the downside, or are turning towards the downside, but in general are clumping. So the clumping could just mean that sideways play that is occurring right now. But in general, we do see that 10 white and the 21 green EMA towards the downside and expanding. And potentially because the price actions below these four EMAs, we could see that fall down first to the 377 EMA at 2900 and then the lower levels. Do keep in mind that we do have a daily level here as well at 2820. So that would be another intermediate level that we want to pay attention to before ultimately aiming for that channel bottom. Now, moving towards the 4 hour time frame, we see that this is a period of consolidation. What it could be is, you could say it's a head and shoulders continuation pattern, or it's just random plays around here that is just clumping and undirective, and that may be true. The reason I say it's a potential head and shoulders is that it could be like this, right? A left shoulder, the head, and potentially the right shoulder forming somewhere around here. If we drew a neckline, it could potentially look like this. And the thing about this left shoulder though is that there is two left shoulders, so we could see that two right shoulder hump coming right here. We see the one right shoulder and potentially another one, and therefore we're aiming for that $3,000 level. Assuming that this is a inverse head and shoulders continuation pattern, we could see continuations to the downside if we do break this neckline, and only if. The reason I like to consider this as that consolidation pattern is because this volume is descending quite sequentially, right? There's no random spikes. Each rise or significant decline is accompanied by volume that does not exceed the previous higher ones, right? So if we do break, it would be great to see an expansion of volume that is larger than these next ones to facilitate that breakdown to show seller interest. Now, if we do break down, this is where the target would be, the top of the head to the neckline, and assuming we do break around here, then we can see that 28 level to be hit. So it's still around that range of the bottom channel and that previous level that we talked about on the daily. Let's see if we can pull it up. Yeah, exactly right on it. So if we do break it, that's how our head and shoulders would look like, right? Now, our EMAs are a little bit clumped, but they are still towards the downside, given that we just got that 55 yellow cross down that 200 red, right? So we could see more towards the downside because of this cross as well. What we want to do is pay attention to how the momentum is looking. The RSI is above that 50 moving average, so that cancels out a little bit of the bearish strength. So if we do get that cross back below, then that would add more strength. But as of right now, it is holding it steady with the 50 moving average as support. One thing that also is concerning is the stochastics is towards the downside, but it could potentially cross, right? And that would therefore reject this bearish territory of 30 to the 20 and ultimately bring the prices towards the upside. Now, with that being said though, not only will it cancel out this head and shoulders pattern, but it would confirm this hourly play that I've noted as well. Right here, it is still a little clumpy, but it definitely does look like a potential ascending triangle. The volume is slightly descending. There's a big peak here, but it is ultimately lower than this peak here. So it is descending, and we are trading in this area, right? So we want to see whether we break towards the upside or the downside. And no matter which way we do, if we do, the target towards the upside would be around the level of 3100. And on the contrary, if we break down, I believe that reaches the neckline too that we were talking about. Let's bring it back up. You'll break the neckline, and that would be more confidence towards the downside. But in general, within this area right now, it's sideways, so we want to pay attention to see whether we do break towards the upside or the downside, and we'll play accordingly, right? Now, if we do break towards the upside, you can break and retest and rise towards that upper target, and the same goes for when we go towards the downside. So this is a critical level to see which way we do end up going towards. Now that is it for this video. I hope you learned something from it. Please like, subscribe, and hit the notification bell for more videos like this one, and I will see you in the next one. Cheers.